Hi, everyone. Welcome to our second Future Food Series of 2023. For those that don't know me, I'm Ashley Hartman, co-managing partner at Bluestein Ventures. We are an early stage venture capital fund that invests in the future of food. We invest across the supply chain from goods on the shelf, how goods get to the shelf, and how goods are made. Today, we are talking about sustainability and the future of sustainability within food. Our mission at Bluestein is to make the food system better, healthier, and more sustainable. So this is a topic that's super core to us. We've made quite a few investments in this space. For example, Mori, which is a shelf life extension technology, Meaty, plant-based protein using mycelium, Real, sustainable paper. And then we have a new investment that's in the sustainable water category. But more than that, I'm thrilled to have this conversation with two powerhouses in the space. The first is Ellie Rubenstein, CEO and co-founder of Manna Partners, which she founded to invest in growth stage companies that are committed to improving human health through nutrition. And then Danielle Joseph, executive director of Closed Loop Ventures, which partners with companies that are advancing the circular economy across sectors. Both very good friends of ours at Bluestein. And for the topics today, we're going to cover defining sustainability, areas of interest, and then what's driving innovation. I'll also leave some time at the end for Q&A, so please drop any questions you have in the chat, and we will address them at the end. So to start things off, I want to have Ellie and Danielle introduce themselves. So I want to hand it first to Ellie to tell us more about your background and Manna.
Sure. Well, thank you, Ashley. This is a true honor. I think we kind of started our firms in about the same time. So I'm Ellie and co-founder and managing partner of Manna. I am live today from Paris, which I was just saying to Ashley right before this. Pretty surreal to me. My mom grew up here, and so much of Manna from a cultural standpoint really truly came from my mother. She was raised in Europe. With basically a subsistence lifestyle, going off to Norway, learning how to hunt and fish. And then, my father, who is pretty well known in our industry. And so while my mother spent the last 25 years in Alaska trying to replicate her childhood and raise us hunting and fishing and sourcing our own foods with transparent supply chain, my very rational institutional investor father always said, you have to hunt and fish your own food. Can't you use the wonderful tools of private equity and just go buy a beef or a seafood company? I said, Dad, not that simple, actually. So anyways, fast forward 5 years later, Manna, we have both Fund 1 and Fund 2 in 5 co-investment vehicles, and we've raised over $600 million of committed capital. When we got ahead of it, and actually I have to give Ashley and several others in this kind of Chicago community credit, I don't come from a farming family. I don't come from a food family, but I've had this passion for food because I had health issues my whole life. And I always really saw the power of nutrition. And in the early phases, there were firms like S2G and Bluestein and Cultivian and Sandbox, and they were honestly all in Chicago. And I got this double master's at Purdue in my master's in agriculture economics and my MBA in food and agribusiness. It was a joint degree, and I wanted to be with people who understood food and build out a strategic network. So that's actually what happened. And, our first deal we warehoused, it was called Mycotechnology. It really did come from shadowing Cultivian and S2G. And then we saw that there was this bullseye of our thesis, which was food supply chain, as well as the nutrition angle. But I would say from the investor standpoint, what we were really looking at is what was needed. So if you take a step back, it was, if you believe that either institutional investors or family offices should have an asset allocation and then select good fund managers, what we weren't seeing was quality fund managers that were sizable enough that would take on outside capital. At the time, Lucas wasn't taking on outside capital. Bluestein wasn't even raising a fund, and Cultivian was much more on the ag tech side. There really weren't a lot of managers. Had there been one, I'm not sure Manna would have launched, but we said, well, let's just do a small proof of concept where we can invest in, seafood and eggs and meat. And we called it basically clean ingredients. We were looking at protein. We were trying to be in more of a refrigerated category that had this end multiple of consumer. And so there's always been a consumer category, usually in someone's portfolio, or a commodity category. And I said to my father, we had just built out this family office. why can't I take that into the private markets? And so when we mapped out where it should be, we said growth. There really wasn't a large enough growth player focused on North America today. And we didn't believe, even though I had a background in the buyout sector from Alaska, that the category of this kind of new wave of food was ready for buyout. So that's mandatory. One more thing, Ashley, when I know you all, you come from kind of the Bluestein family, we didn't have that, right? Your principal was CEO of Ingredion. And so while everybody knew us from the private markets, we were trying to build out a strategic LP base. So today we have over 300 investors from 18 countries, 19 states. Predominantly, they were really sourced by myself, focused on distribution or strategic angle. And I would say that that's probably why our growth is happening, is it's been very strategic for kind of breaking down the Chinese firewall and saying, okay, we're happy with your success to date, and we may help your company scale. So again, that's mandatory. And I'm a huge believer in carving out my own path. And that's why I'm not in the family office and really believe in having your own fund.
And you've just, set the stage for huge growth within kind of the food industry at the later stage, which was really a need for sure in the capital markets at the time. And then Danielle, you focused much earlier at Closed Loop Ventures. We've co-invested a lot. I'd love for you to introduce yourself and give your background and more about Closed Loop.
Yeah, no, it's such a pleasure to be here, and with such sector specialists in the food and ag space with both of you here. So I don't normally get to say this, but circular economy is actually maybe a broader topic than who I'm here on the panel with today, but it's relatively specialized given the broader market context. And so Closed Loop Partners, we focus specifically on enabling and creating more circular economies. So we think about waste reduction upstream throughout supply chains, and then also at a post-consumer level. Of course, if you look at what is going into landfill today, 40+% is often organics waste streams from consumer, from restaurants, from retail locations, and then also further up the supply chain. So when we think about how to invest in food and agricultural systems, it's often from the perspective of how do we reduce waste in those supply chains and make sure that whatever waste is being created can be upcycled into something of higher value rather than going straight to landfill. And so we have some consumer investments. We also work in B2B supply chains. I think from a ventures perspective, we invest in seed and pre-seed stage companies, so often getting in very early. Our proud co-investors alongside Ashley in companies like Mori to prevent food waste from happening upstream. And then the portfolio is obviously much broader than that. We also invest in manufacturing efficiencies, plastics reduction, textile waste reduction, and then built environment, really across the entire industries that we all live in today. I think one of the really interesting things that we've seen, because we have a slightly broader mandate, is we've started to see the intersection between food and all of the other industries that we play in. If you think about like a lot of the kind of plastics that are being manufactured right now, like the PHAs and PHBs that are biodegradable, it's often from food waste products. And so we like to see those types of intersections. The other thing that I'll mention related to investment thesis and food is biodiversity and ecosystems is a huge part of original food systems, right? And how ecosystems were originally created. And we think about circular economies, getting back to something that looks more regenerative is definitely a huge goal for us. Backing up a bit more, Closed Loop Partners is not just our ventures group. We also have a private equity firm, a catalytic capital group, an operating company, and a advisory services business. Across all of Closed Loop Partners, we work with Fortune 500 companies, both as LPs as well as core strategic partners to help scale our companies and then scale our impact, in addition to a number of institutional investors and families. So broad platform to create the circular economy. Really happy to be in it. My background personally, I come from private markets investing. I did some startup work early in my career, but then fundamentally have been private equity, project finance, venture capital across environmental markets for over a decade now, which I'm just starting to feel how old that is.
So clearly we'll have nothing to talk about today because So I want to start and really just define sustainability. So sustainability is a really broad and often overused term. It's often used as this kind of buzzword around food, more to gain kind of marketing points. But dialing it in as it relates to food, at a basic level, a sustainable food system is one that delivers food security and nutrition for all in a way that minimizes negative impacts to the environment, society, and the economy. And so this is really important because food is a significant contributor to climate change. And I think, Danielle, you pointed this out, that food kind of touches everything. It's not just defined to kind of the food that's on your plate, right? So to give one example, agriculture is the world's biggest user of fresh water. Estimates have food waste contributing to 25% of global freshwater consumption, accounting for 8% of global emissions. And there's like a lot of real innovation happening across the supply chain in sustainability. There's a move toward regenerative agriculture. There are efforts to reduce food waste with digital tools, shelf life extension technology, circular economy, localizing supply chains. And there's obviously new packaging that we're seeing kind of crop up. But I want to kind of dial into both of you. Ellie, you've made quite a few investments in sustainability with Vital Farms and Gotham Greens. You've also been at the forefront. I love how you kind of put the H, talking about health, in this kind of ESG framework to capture the importance of health and nutrition within sustainability. How do you think about sustainability? And then what are the areas at the later stage that are most exciting to you these days?
Yeah, well, look, it's when you reached out about this, it's honestly not our number one word that we use. We're really focused on clean ingredients and nutrition. And I mean, I can just use Vital Farms or Verde Farms as an example. We know that if there is health within the environment, the end user, being the human, is going to have a healthier product. So if you take about Vital Farms egg, we always said this, I technically have what I thought was an egg allergy. It always comes up as allergy tests. I actually don't. I have a feed or hormone allergy. And so one of the things we were always looking to do was, again, within the vertical integration of the supply chain, was cut out commodities for two reasons, right? When Vital Farms went public, they always struggled, the analysts, of how to price this because they didn't understand the feedstock input. So that's one of the reasons why we love regenerative in Verde Farms. All they do is eat grass. They don't call it grass-fed beef in Uruguay. We are the largest exporter of beef out of Uruguay. It's a network of 1,000 farms. Now, we do not own the farms. And whether it's Verde Farms or our sour cream or regenerative dairy company has sour cream or cottage cheese that went viral this year called Good Culture, that's even one more step removed where they don't even own the processing. So for us, we do document ESG. We did, and I take the blame for it, I guess, not credit. We called it ESG plus H. This was before the whole ESG, became a political world. And we realized it's not really a marketing thing. And we're the first to say that within our IC, all we're saying is it healthy or is it not? And the reason that is important is, look, unhealthy food makes a lot of money. I think that there was just more of a moral challenge to us all. And most people in Manna Tree truly do have health issues or within their family. There's many people that have, there's type 2 diabetes, and there's some sort of personal connection to this mission. So we all feel like, as my partner Ross says, we should be in the calorie conversion business. Where it gets interesting is, we try to say, again, sustainability is not our leading word. We say we are in the cleaning up of the category business. And why we say that is, if we have a salad dressing, if it's cleaner than the category is today, then we will most likely invest in it. But it does need to be clean label. There does need to be transparency over the supply chain because we are documenting ESG, but we're just doing that at the portfolio level. And I think, Ashley, my takeaway on this is, if you can meet an institutional standard, and we're a small firm. So this year we decided to do, the ESG reporting for the Carlisle CalPERS EDCI reporting, that what we found from this is that almost all of our companies already have heads of sustainability officers. It's ingrained in the companies. So people that are attractive to Manna Tree as LPs, they have these very strong cultures in their company. And what they're looking for is, it's always referred to as founder friendly capital. We have said it's got to match our culture, which means we're headquartered in Vail, Colorado. We make you do team workouts with us. We go for hiking. Most Manna Tree employees tend to eat the same. And so for us, sustainability is, yes, it's in the supply chains, but it's very clearly also in the ethos of the company, in the sustainability of the culture, in sustainability of the business model. And I don't want to leave that out. We've been very, very cautious to not label ourselves an impact manager. And we know where we get bucketed. We tend to get bucketed actually in real assets or in some case impact, but it's pretty small, the percentage that bucket us. What we do know is it's people that are looking for allocations to food. And so we stand by, like Danielle was saying, we believe food should be its own asset class, because when you're trying to look at how to underwrite these companies, there's the CPG and multiple, and then there's the real asset component or infrastructure. And so we believe that it's food. So I say that because we're in an attractive sector right now. A lot of money was raised in climate transition, but I read recently that the second most attractive sector is sustainable ag and food. And, we know what that takes, which is a consumer brand. So you have that loyalty of the consumer, a brand you can trust. When you buy that company on the shelf, we hear this all the time. Your fridge is how I eat. Health Aid, Good Culture, Vital Farms, right? It's all these brands that you can trust. That to us is really sustainability.
Yeah, and maybe
that
just
makes a lot. And Danielle, please jump in.
well, just taking a different tact on that, because I think that's like, Ellie, I love what you're saying, especially from the consumer angle. And then when we think about sustainability more on the business, like B2B side, further upstream in the supply chain, it is a combination. When we're looking at companies, what we're defining as sustainability, what we're defining as circular economy is, number one, does the product or service fundamentally reduce waste for some consumer, right? And so that should have a direct impact on either a top line or a bottom line number for whoever they're serving. And that integration between whatever that impact is and the business unit that they're selling to is incredibly important for longevity of that impact to happen. And so when we think about sustainability, Ellie, you mentioned this, it's the sustainability of the business model, right? Is there a pathway for this to succeed? We don't ever want there to be a conflict between making the right choice for sustainability and waste reduction and the growth of the business. And as long as those are so closely tied at the early stage, we feel really comfortable with investing. I think the other way of looking at this from a business perspective and a diligence perspective is how are the companies and the founders in particular, because we're investing so early, so it's really about the founders, how are they thinking about the growth of the business? What are their end goals? How do they want to build out their teams, right? And so we think about how do we make sure that there's fair labor practices within the company and within the partners that they're working with. Alignment, Ellie, I love what you said also on alignment to the investor values, right? I think that's incredibly important, because you do want to be able to have those conversations at a board level to push the company forward across all of those, both impact related metrics and business and revenue drivers. And so we similarly think about sustainability across all of those ESG categories. We measure only 4 across all of our portfolio, partially because at such an early stage, it's incredibly difficult to actually get high quality data. And so we work actually very closely with our portfolio companies to build out models, understand what are their CO2 emission reduction potentials, how much water could they potentially save in their supply chain, what waste is being diverted from landfill, and what type of jobs are being created. And that's the core metrics across what we're tracking from an ESG perspective.
And Danielle, can you just share maybe a couple of examples from the closed loop portfolio? I think it would bring it to life of kind of investments you've made within food in this economy.
Definitely. So we talked about Mori a little bit, or you mentioned Mori a little bit earlier, which is a coating technology that extends the shelf life of produce, whether it's kind of at the transportation level or at the retailer level. Really fantastic technology, applicability across different food types. So whether it's a leafy green or a meat product, you could extend that shelf life. When we think about sustainability, when we first invested in Mori, what we were really excited about was not just the impact on food waste reduction, but also the ability to bring food, healthy, nutritious, and whole food into areas that maybe don't have access to it today, right? So if you think about food deserts and why they don't have access to healthy produce, part of it is because if you don't have the turnover as quickly, then you're letting the bananas and the greens spoil on your shelf. But if you have, instead of 1 week to sell that produce, 3 weeks to sell that produce, you have a higher likelihood of actually being able to take that in and sell it.
Can I comment on that, Ashley?
Yeah,
It's a relevant point because I think, look, so Gotham Greens is a great example. We call it, when you look at where our companies expand, they all have certain criteria, right? So Gotham Green goes into food desert locations. Cheetah Logistics, they tend to go where independent restaurants are. So I think by the time they reach us, they know who their consumer really is or what their category is. But why I bring that up is that, in Gotham Green's case, they are in greenhouses. Obviously, the CEA sector is getting an enormous amount of attention, but it's amazing to me. I mean, in our world, we know this. Vertical farming is not the same thing as a greenhouse. And so, we knew this. We knew one was profitable at the greenhouse level and one was not. And a lot of it has to do with, are you really in this kind of late stage venture with enormous venture-backed funding that is not profitable at either the greenhouse or the corporate level, or are you really in a growth equity investment? And I think that's what gets missed. And it's unfortunate because, today Ag Funder came out with, I thought, a pretty bold article that said, we all have our own categories, whether it's plant-based or, we're all so strong about our things. But Danielle, what you commented on is, I think the supply chain is what really allows all of us to say we're strategic food investors versus not. Because what I'm watching in, this era of bridge rounds this summer is the ones that are most helpful to the founders are the ones that understand the business. And that really does mean supply chain, because if you can actually get, cut a, like, for example, with what you were saying, Danielle, in food deserts, yes, I'm Alaskan. We import 95% of our food. It would be wonderful to have it by the time berries reached our grocery store that they're not moldy. But that's what Gotham Greens does, right? Traditionally, lettuce takes 5 to 7 days to reach the shelf and can only stay there for 1 to 3 days. Now it takes 1 to 3 days to reach the shelf and can stay for 5 to 7 days. So you're extending the shelf life. And in Colorado, we now have 2 greenhouses. And they're essentially basically able to get leafy greens on the shelf of almost the entire state just by 2 greenhouses. So it is really that important. But I do think it is the defining characteristic at the mess of all of this is that the understanding of what makes a supply chain versus a generalist coming into the sector and saying, oh, I can fix your margins. That's not very helpful if they don't understand what is causing the margin erosion. Does that make sense?
Yeah, I love
100%.
that. Maybe another.
Oh, go ahead.
Go for it.
No, I was going to say, I think that that's when we come back to the sustainability being this kind of overused broad term. Really, you can't make an impact and you're not going to have a sustainable company unless you build a scalable business. And in the food industry, you have to do that by being operationally efficient and very operationally focused. And so I think that's kind of where this kind of specialist mindset comes in. How do you build a food company to be, instead of just kind of slapping on, the latest technology and not really thinking about your unit economics over time?
Yeah. And I think maybe just adding on there, you also have to think about who has margin in the supply chain to pay for these types of innovations. And I think as specialists in food, right, we know that the supply chain is not, it's not filled with margin, right? These are really tight margin businesses generally. And so, Ellie, as you were commenting, I was thinking about, we see a lot of companies that are trying to sell products to farmers, right? To make their, as you were talking about, like kind of top down, right? How do you make your farm operations more efficient? And I cringe every time I see something like that, because you're asking the lowest margin provider in the supply chain to pay for something that arguably they don't really need, right? They know how to farm way better than any of our kind of technologists do, no matter how much data you're giving them. And one of our other investments is a company called You Crop It, which has figured out a model by which the farmers can upload data about how they're farming, about their practices, about the regenerative agriculture, and actually get paid from the remainder of the supply chain for that data, right? Because it matters to folks that are further downstream what where their products are coming from, that it's farmed on regenerative land, et cetera, how those products are growing under different conditions, right? And so if they can access that data and figure out the supply chain whereby those farmers are actually getting value, that's something that makes us very, very excited. And I think when you're operating and investing in this space, to all of your points, you really have to know who the buyers are, who has willingness to pay, and how do you create value for multiple different layers in the supply chain.
Where do you both see as the biggest barriers to scaling, sustainable startups? And is it kind of on the agriculture side, manufacturing, cost parity, financing, consumer adoption? Where do you see as those barriers?
Well, I don't know, Ashley, we're probably so sick of us sending you 99% of our early stage deal flow. I mean, we've looked at, I think, 1,700 deals, and we usually refer most of them your way. Look, I would say not on the manufacturing. We're seeing double-digit EBITDA margins in co-mans. It's no secret most people are going kind of more upstream because they do control who really has scale, and also they tend to be more family-owned businesses. I think the sectors that we're seeing is co-man are very attractive. But look, I just became board chair of a company called Infinite Health, and it's in the microbiome. And some of us, we're hiring. We did have a 20% venture allocation in our fund one. And what we are seeing is, I do believe the difference is in the management team. Honestly, I hate to say it, but we can tell a lot from the CEO, the management team, and the investors around the table. And if you can truly make it to the growth phase, you will make it. And I think in that case, it was a strategic pivot where they were willing to not just focus on commercializing food as medicine, which we've all been, waiting for this big moment, and actually go down the retail path. And so for us, from a category standpoint, I think we're seeing when adjacencies work. Gotham Greens, right? If people are unhappy with going on vertical farming, but they love the concept, they are looking, and we are not having problem attracting capital or interest into Gotham Green. In the microbiome, biotech is getting pummeled, right? It's been so much venture-backed money, and biotech takes a long time. And if you have microbiome with one company, two product pathways, especially on the consumer angle, it's very attractive because that means there's revenue coming in. That tends to be what we are looking at, is how to, make these pathways for founders or, management teams that really understand how to get it through. Actually, Sanjeev at S2G years ago called it through the Series C cliff. Whether it's Series C, D, E, somebody the other day said in venture that bridge rounds are the new up rounds. And I think that's a good way of looking at it, right? If you can really get through a bridge round, and we are seeing this, right? Many investors are in similar types of company, but they are making hard decisions of what to do with the company. The market will tell you pretty fast whether you're going to grow or you're not. And I think we're just seeing the growth of, if you can make it through that bridge round, that growth, that J curve takes up. And I think you used to have to wait a lot longer. The other thing that we're seeing happen, actually in company of one of yours, the top line grew, and they come back to us and they're like, but we grew a top line, we meet your revenue thresholds. We're like, yeah, but you don't meet our bottom line revenue threshold. And so we have very clear criteria that we haven't really wavered from, which is 50 million in revenue and positive EBITDA margin. Or we used to say a path to profitability. It's pretty clear right now. Once you're at that 30 million, for our case, we put you on a watch list. We do have kind of our M&A watch list of 5 to 10 million. But there are some companies, go look at Kevin's, right? That came out of nowhere. We were tracking it for the last year, and Mars bought it for $800 million. All they did was zero marketing dollars, or just get on the end caps of that grocery shelf. And so there are companies out there like it, where they just get one good investor in there. We're tracking the one, and you really can grow that revenue. But we always say, I believe actually in all of our companies this year, top line grew. The ones that were having some of the issues were really where it was with margin pressure. So that's where we tend to be pickiest. And I would underscore that enough. I know it's a tough time in our industry, but and then one last thing, Ashley, there's a great article got circulated amongst our team yesterday on Allbirds and what happened. Not that that's our sector, but it's a great example of what happens when you may be in 57 SKUs and you need to focus on 3. You got to stay focused. And, I think if you know what you do, just make sure you're delivering on your core product so that If that's where your margin is coming from, most of it, then focus on that. This is not the time to become the platform play and have all these SKUs. You just can't make it right now. So that would be what I've said to most founders is make sure you are profitable and make sure you're focused on your companies that are your highest grossing margin products.
Yeah, and I would maybe just adding on to that, then I obviously at a very different stage, much earlier, where we're investing often like pre-revenue or just early revenue, so the growth paths are maybe a lot less clear. But I think what is clear, and I guess the advice to founders, to the extent that any are in the audience, is really think about what are all of the costs in the supply chain. I think what we've seen a little bit of is founders who have a really great idea, really great product, but as they start to scale, they realize, oh, this is we need to move this X material from like, Central Valley into, a totally different region. And how do we get that there? What and those costs are meaningful, right? Transportation costs are really meaningful. And we see that both on the front end of the supply chain and on the back end as we're thinking about waste processing infrastructure. And so really making sure that you understand what are not just the COGS, but also the material inputs, but whatever your product is, but the logistics costs in order to make that product happen. And then whatever the CapEx requirements are also. I think we were looking at a biotech company just the other day that was saying that, on their equipment, they would get, it's a 12-year payback on their equipment, which is too long, right? You just we can't fund a 12-year payback, and nobody can really, like whether or not you're in this market environment or the one from 2 years ago. And so as you're thinking about scaling, like how much can we do on our with co-mans rather than in-house. And I think over the last 2 years, honestly, I think a lot of folks have gotten lazy about that because it's been so easy to get capital in. The assumption has been, oh, we'll just build it in-house rather than figure out how to utilize existing manufacturing capacity. So I think maybe just building on what Ellie was saying, like figuring out how to optimize your supply chain, really focusing on costs, which is just good business practice, right? We should all be so laser focused that we're looking at positive gross margins and can potentially grow to cash, right? Like a reminder, venture capital is a accelerant, should be used as an accelerant to growth, not as a crutch, right? And so
yeah.
Let's to remember.
You should have that behind your head. I like that.
We call that 12-year payback
behind my head, but not that one.
Yeah. We call a 12-year payback not a viable business. So
yes, exactly.
But I want to switch and talk a little bit about kind of innovation in the space, just because this is the Future of Food series. So let's talk a little bit about the future. So sustainability is a growing topic. I think it's a ripe opportunity now because of this combination between you've got the consumer demand that's pulling it, that's driving companies to change. You've got regulation that's percolating with Canada and Europe leading the charge in particular. And then you've got technological innovation that's happening as well. I'd love Danielle to talk a little bit about what's the role of technology and are there any specific advancements or trends that you think are going to be significant in the coming years to enable startups around sustainability to exist?
Yeah, I think great question. Number one, I think especially in food, but really across almost all industries and all materials that we cover, supply chains are still very analog. And I'm really excited and have been for a while, but I think that trend is continuing to see more digitization of those supply chains, better understanding, better transparency and traceability across all of them. I think that's only going to be accelerated by the growth of AI and the accessibility of building software in-house. I actually am curious to see now that it is so accessible, right? How many companies are just starting to build software internally that services their exact needs, and you're going to see a lot of optimization, I think, as a result of that. So that's one. I think the other side, while biotech is getting hammered right now, I am still so bullish on kind of the future of microbes to do manufacturing work for us. And what gets me excited about that is, number one, there's a universe of microbes out there. And to date, we've really only been working with like the top 4, right? And so there's so much more that can be done and produced. I think we're just starting to like scratch the surface really on what can be made there. I think a lot of food waste is going to become an input to those biomanufacturing processes as well. And so we're going to start to see more circular economies just enabled by biotech. So still very bullish on that. I think to all of the points that I made in the last comment still ring true. It is very capital intensive. It's a long timeline to market. It's like, it's hard to build those types of businesses, but there's such an enormous impact and potential there. And then as just a third category, I would say that the localization of supply chains is another big trend that we're very excited about, both investing against and kind of seeing come to the forefront. There's the technology that enables that, I would say, is kind of faster timelines to like manufacture and build things on site. And so you're starting to see some of those costs come down, folks figuring out how to modularize their systems. Ellie, you're talking about kind of the greenhouses being built, right? Which we're really excited about. We also invested in a company that does backyard rewilding and putting in like local just raised beds for homeowners, which is a huge impact both for homeowners who can have fresh produce like at their fingertips, and then also creating more regenerative landscapes. So I think across kind of data, biotech, localization, those are all massive trends that we're really excited about.
And then
Yeah,
Go
I
ahead.
love this question, Ashley. You know, a lot of times people ask, you know, when you have early success, and you guys have as well, like, what's next? And I'm like, I could spend my entire career in food. There's that much opportunity, which I love. But I would also say it's really different than when we started, because when we started, you know, Vital Farms was really the first ESG IPO stock, right? And right now, and we kind of look, we got lucky. I mean, what kind of first time fund manager has their first deal have $1 billion IPO? It's pretty unheard of. And so, you know, we were lucky. We were like, oh, okay, that's an exit. Now we're going through, you know, what do realizations look like in today's market? And it's very different, because you look at like Kabu just had their IPO. Well, who would have thought that restaurants would have been headed to the IPO? I remember in the early days of Fund One, we were like, we don't do restaurants, we don't do ag tech, and we won't do animal health. And it's really interesting because it is in some cases now cheaper to eat out at a restaurant than it is at home. So you start looking at the themes and how they've changed. I remember in the early days, we were looking at a ton of direct to consumer. And now that's not really usually a core part of our focus. We are moving away from those categories. So Managed tends to be a category investor, just like when investors, you know, map the market of who are the leaders in the fund. We really won't just go into a deal unless it's sent to us, unless we've mapped out the category and said, is this the category winner? And I think it's because we have to have conviction in the category that it's a big enough market, and then we're the right investors for it. So, you know, I'd say, look, I didn't expect to talk about the microbiome. I'm a huge fan of this category, and I've obviously done it on both the philanthropy side and on the policy side, you know, within food as medicine and those section 1115 waivers. Been trying to, you know, get it in Alaska, and I was on the Tufts kind of Innovation Advisory Council in the early days when they were looking at Food Compass, because we were trying to prove out, how do you document, is something healthy or not? It is not that simple. And I kind of had to say, I'm not sure investors, you know, like us should be taking these risks, because if big food is going to buy our companies, I don't really want to be the one to tell them that their companies may not all be that healthy. So we kind of backtracked from that and said, where do we want to play? And I love this question, because on the microbiome specifically, there's 56 strains today identified in the gut. And while we're in our companies in the infant, you know, gut space, so newborn gut deficiency is what we call it. That's not a word that anybody knows. I always tell people 9 out of 10 people today, sadly, are born if they've had a C-section, been in the NICU, or had a mother on antibiotic use or environmental toxin. They're born with poor gut. And so, you know, everybody likes to blame their parents for things. I love blaming my mom for this. I'm like, you know, Mom, this is really not fair. But I feel so empowered. And it's very rare that you get a company in your portfolio where you feel like you're actually improving human health. We like to think we're doing so, you know, with eggs and beef and in our, you know, regenerative dairy company. The reality is today, the standard of care in the NICU or in the hospital, or if a baby is sick, is still an antibiotic. That's a problem because we're killing the gut on day one. And so we don't even have the healthy gut to break down some of the toxins or enjoy the amazing things that are like regenerative agriculture. So we get very excited about it. And I don't think that food investors deserve enough credit for what we're seeing, which is a move away from pharma. And we are truly taking dollars away from healthcare. I think in energy has moved so much in energy transition, but the biotech and healthcare markets healthcare is such an enormous sector that it really hasn't been food. So you look at where we are getting those dollars, it is healthcare. And so we call that consumer health. I can't say enough good things about it. We looked at like the wearable sector, but the hardest thing about being a food investor, as you all know, is you have to take out of your personal belief. There's many companies that I eat that are early stage companies. And I love going on and buying products late at night. I'm guilty of all the Facebook ads that come my way. All my Facebook ads are food, right? I try every startup that there's out there because I truly love to try. And, categories that we love, we haven't entered. Hydration, I think it is one of the most crucial categories. Functional beverage, we're in it from Health Aid. But again, that's supply chain, right? We finally got our costs down from going from glass bottles that were obviously not coming from the US into cans. I think the little wins like that, we are very, very excited. So I would say it's much more about category innovation than anything, right? We like restaurants. We like that the formats of restaurants are changing. We love that people are finally paying attention to indoor agriculture and greenhouses, which is a technology that has been around in the Netherlands for a long time. We love that people are looking at regenerative agriculture. Nobody had heard of a pasture-raised egg when we started. And then more importantly, the microbiome and empowering new moms. So those are what I would say is across Fund 1 and Fund 2, there's been virtually no changes in the categories. It's just been taking a much larger stake. And then one more thing on that. People today are focused on, are you venture growth or buyout? I don't believe that is the right question. It needs to be much more about what tools of the private markets can you use to help these founders? There is truly no bank of food, right? Yes, there's Rabobank. That's about it. As far as we can find, there was always Silicon Valley Bank. We are not tend to be in technology unless technology is in our supply chain. And so I think my advice to founders, as well as the investors are listening, is come to the table, not with, we want this much of equity or this much debt. Say, where can you be helpful? Is it infrastructure, real assets, credit, food? And don't be married to it, because you're going to find the founders have usually what they need. It's just the right type of capital to get them over the hurdle is what we're seeing.
That's a great closing thought. I want to ask a couple of rapid fire questions, and then we have one Q&A that I'll get to right at the end. So little rapid fire. Danielle, which foreign country is a leader in sustainability innovation?
You're on mute.
Mute.
Definitely European countries, kind of like the EU generally. The UK as a standalone actually is quite a leader as well. But we're seeing so many just proactive regulations, and it's great. And I think we're very far away from having those types of proactive regulations here.
Ellie, to pick on a little theme that you just touched on, you have deep ties to Alaska, and you were recently appointed to the Alaskan Permanent Fund. What's your favorite Alaskan dish?
Oh, I mean, if you're Alaskan, we import 95% of our food. So we all like to solve food security on our own. But look, it's a huge honor being on that board. It's the largest sovereign wealth fund in the US. And we believe sustainability is investing in natural resources. There is no ESG mandate. So, I think that's one of the greatest technologies that exists. And frankly, the number one source of revenue into the state is from the permanent fund, which I think is incredible. It shows the power of the private markets.
Danielle, is there a type of company within sustainability we'll never see in the closed loop portfolio?
We are huge fans of everything that's happening in the climate tech and sustainability space. One way that we're trying to differentiate from a lot of the other folks that are out there is we tend not to invest in a lot of energy related companies. And so you'll see much more of a focus on hard technologies than you will on energy related innovations.
Awesome. And then we have one Q&A that I want to get to from the audience. How do you think about tools to measure sustainability outcomes, and where are we on the path to market maturity in this emerging category? So,
Okay, we have moved into the institutional world. So again, we are following what we would call the EDCI, which is the, it was really started as a Carlisle CalPERS data convergence project. It's 300 managers. We met those deadlines. As I'm going to tell everybody, this is an iterative process. You can't just think you do it once and you're done. You have to follow the guidelines. So I would echo what Danielle said. Europe is far more advanced, but you're going to find as you go raise capital, if some of your investors are meeting the European standards, you may need to start to meet those standards. So we are eyeing it. And so we are unsure if we're going to go down the, the compliance path of ever building a product that would be in the European standards. But I do think, look, I'm sitting in Paris today, that it is very clear they are far more progressive on climate tech, fintech, even food. I'll credit again, like I said, my mom and my who grew up in Paris. The sustainability is at the heart of what they do. They don't even, it would be like grass-fed beef in Uruguay. They don't call it grass-fed, it's just beef. The Americans are behind. And I hate saying that as an American, but we are having to look to them for innovation. So if you want to know what's going on, come to Europe. You will see it. You see it here. You can eat the food. I love that I can eat a pain au chocolat and it doesn't hurt me here. The wheat, I think, is a little bit different than it is in US.
Yeah, and unfortunately, no real tools. Like we've evaluated a whole bunch of the different sustainability reporting kind of softwares that are out there. Nothing really hits the nuances of each of the different companies that we're investing in. And so even for some of the SFDR requirements and stuff that we know we're going to report on for some of our LPs, we know that our early stage companies are not ready for that like level of reporting. And so we're still working honestly on Excel sheets, coming up with bespoke models for each company, which is painful.
One more thing on that, Ashley, I would recommend companies like we use Key ESG, go to a data service provider versus trying to do an annual report, because it makes it easier to do. And we may be headed down the path of carbon accounting. It is far harder to get a lot of that data, validated in terms of from an audit, if it's not already in a tech system. So I think we're headed down where people are going to have to use these key service providers from a tech standpoint versus just a pretty ESG report.
We are already over time, and I think we could talk about this probably for another 2 more hours, but I want to let Ellie get back to Paris and Danielle get back to work, and just thank our audience for tuning in, and thank both of you so much for joining us. You just bring such a wealth of knowledge that I learned a lot, and excited to continue collaborating with both of you on food.
Thank you, Ashley.
Thank you so much.
Thank you for
Ashley.
organizing it. Thank you for everything you do for our ecosystem, truly.
Thanks to you both.
Thanks. Bye.
Thanks. Bye.